Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing precisely on the JPY. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that at the moment, from a monthly standpoint, this market is trending to the upside quite aggressively, creating monthly higher highs and higher lows. Now, as the market is continuing higher, we could expect more bullish continuation being created, with the creation of a stronger higher high, since the last move was the creation of this higher low. So this low that was higher than the previous one, the high was here. So now we could expect a potential new higher high to be created, therefore continuing this bullish trend with the creation of yet another higher high and the continuation of higher highs and higher lows. Dropping down on the weekly time frame, what do we see? Well, from a weekly standpoint, we can notice how we just had the completion of this weekly impulse correction, an impulse pattern to the upside. After a new impulse, what we could expect is first a correction and then the continuation to the upside. And we will see this in more detail if we go down on the daily time frame, and we can notice, in fact, how the market at the moment has just created this impulse to the upside, correction, new impulse to the upside. At this point, we could expect yet another correction and then the continuation to the upside. Now, I also spoke about USDJPY just a few days ago after the market created this W formation, explained all the reasons for which we could expect this completion at the neckline, which is in fact exactly what the market did. And after the creation of a completion at the neckline, the next logical step would be the rejection of the neckline, because the neckline by definition is previous resistance turned support, as I explained already many times. And by the way, I will link that previous analysis in the description so you can go and check it out for more free education. I also spoke about USDJPY after this impulse and correction, explaining all the reasons for which more bullish continuation could be expected, which again, you find in description. But at the moment, from a daily standpoint, we must identify that if from here the market will create a push lower, essentially we would have the creation of an M pattern. And after the creation of an M pattern, what you would expect is a potential push higher for the completion of the M pattern at the neckline. That is what most of the times the market does. That is the way in which most of the times the market reacts to such pattern. And we can see this also in the past. We can see, for example, here we had this M pattern, the market completed it at the neckline. Again, here we had this big M pattern here, the market completed it at the neckline. So it is a very common pattern in the market. And it also has a quite important psychology behind it. If I'm not mistaken, in my last gold video, which you find if you just go on this playlist just a few videos back, in my last gold video I explained all the psychology of this pattern. Now, continuing with analysis here from a daily perspective, as the market has created this, if the market will create this M pattern, there is a good probability of seeing more bullish continuation, because as we have already seen, the monthly and weekly time frames are already bullish. Now, before we go into more detail here in the daily, first, let's go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing precisely on the JPY. Now, what we can see here is that with the last reports, net positions have been massively decreased. We went from minus 132k net positions down to minus 173k net positions, with 31,000 shorts added with the last report, reaching 208,000 shorts from an institutional perspective on the JPY and only 34.5k longs. Now, institutions shorting the JPY make USDJPY stronger. So this is bullish from a fundamental perspective on USDJPY. So let's keep that in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in description, so you never miss new updates. Now back to the analysis. Well, from a daily perspective, as we were saying, if the market will create this push lower and create this M pattern, at that point there is a good probability of seeing a potential rejection to the upside, completing this M pattern at the neckline. So if we will see the creation of this M pattern, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market at that point, I wouldn't be surprised to see a potential push higher, completing this M pattern at the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in description. From here, in fact, you will have the possibility to gain access to my entire courses. You will also have the possibility to gain access to one-on-one live private mentoring directly with me, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you continue to scroll down the website past the testimonials, you will see that you have the possibility to join and gain automatically access with email and password that you will create during the sign-up process. So I really suggest that you go and check it out as soon as possible. The link is in the description and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.